Good.
Welcome to Tony at 12. Today's guest is Professor Michael Mainelli of ZN, the City Research Centre and think tank. We're in conversation regarding green finance centres following a comprehensive report published last year by ZN. Michael, good to see you again.
Very good to see you, Tony. I'm always delighted to be able to appear with the folks of Alderney.
Well, that's always good to hear. Can we start off by asking you what the definition of green finance is?
Yes. Well, in some senses, it's a fairly straightforward definition. It's any type of investment or financial services activity which is trying to achieve some type of sustainability goal. So, for example, reduction of carbon, which is very topical, but it could equally be putting in a biomass plant, various forms of alternative energy, various types of investment in forestry, and so on. But it is an interesting question. Why do we have green finance? Why is green so special? We don't have kind of, welly boot finance. We don't have, furniture finance. So why is it special? And I think it really underscores one of the big themes we've been finding time and time again as we conduct our various reports. And that's that it's got a heavy, heavy dependence on government policy risk.
Yeah. Now, there are several green centres, financial centres around the world that you've identified, and you give them marks and are able to assess their situation. Where are they primarily, Michael?
Okay. Well, we started a number of years ago, 16 years ago, something called the Global Financial Centres Index. And we had always wanted to look at the global green finance world. And a few years back, the MAVA Foundation in Switzerland, the same crowd who also give a lot of money to WWF and things, actually said they would like to help sponsor it and get it going. And they were really wonderful to work with. And we've brought out now 6 editions of the Global Green Finance Index. And so it's really looking globally, where's the action? We track 74 centers at the moment who claim to be in the green finance space. And they range from London, where I'm currently dialing into you, through all the continental centers you'd expect, Copenhagen, Amsterdam, Zurich, and then on into the Far East. But I would say that when it comes to the rankings of those 74 centers, the dominant ones, the ones that are much higher up in the ranking, are in fact the European centers. And one could wonder how much green finance so far, I think it's changing rapidly, but so far has been a bit of a Western European affectation. North America doesn't feature heavily there, Asia doesn't feature heavily there, and very few offshore centers or African centers feature it all strongly.
Yeah, well, of course, as far as the US is concerned, the recent incumbent didn't believe in global warming, did he?
I don't know what his personal beliefs are, but I think you're probably right.
But I think we all accept it's happening, don't we? Global warming.
Well, yes. Having a science background, I'm always a skeptic, so I'm open to skepticism. But yeah, I think we know that, and I certainly have been treating it seriously personally for 40 years, 45 years, and so I'm very keen on doing something about it. I believe, though, that what we're seeing in a number of places is a bit of a lock onto some norms. And whilst we could have locked onto a whole variety of different norms, this current net carbon zero 2050 target, which seems to be doing the rounds, might actually be a very positive statement.
So it's essential to have target dates, isn't it?
Well, it's essential to have dates, but I think even more importantly, it's essential to move on to the economics. If you look at what you can do about green, and this is me speaking as somebody with an environmentalist hat on to some degree, well, you can regulate it, and that was very trendy, and really from 1970, I think it was under Richard Nixon that the US created the Environmental Protection Agency. So you had all of that kind of element. You then have, of course, what I still think we need to do a lot more on, but the very positive aspects of Kyoto, which was that you're able to take an externality, burning carbon, and internalize it. That's economics talk for putting a price on emitting carbon, but allowing it to be traded. You then have taxation, which is what a lot of people would like to look at. And then you have the kind of the shareholder activism of the environmental, social, and governance movement, the ESG, as it's called. And these are four different ways of tackling it, because whilst I admire the sentiments of many people who take to the streets for Extinction Rebellion or whatever, or the good and the Greta, at the end of the day, what are you going to do? You're aware. Okay, we've been aware for a very long time. So what are you going to do? And so those are the sort of the four factors that I find important, as say, regulation, internalizing the costs, the taxation element of it, and the shareholder activism. And to that, I might, in fact, we could probably discuss this towards the end, invoke a fifth, which is policy performance bonds on governments.
Yeah. So the carbon credit market is still working, is it? We heard a lot of it, a few years ago.
Well, the carbon credit market has actually always worked.
Right.
Now, that's a loaded phrase. What I'm trying to get across here is that, so just for the listeners, how does the carbon credit market work? Well, basically in Kyoto, which was the COP then, the Congress of the Parties, in 1997, the world signed up to the idea of following an American scheme to put a cap on the emissions, a tradable permit on each of those, and then those permits would go out, and the person who could, in fact, avoid emissions would therefore be able to sell their permit on to those who needed to emit, and that the emissions targets ought to decrease year on year.
Mm-hmm.
So, classic way to reduce the market. This was based on the United States' success with the sulfur dioxide markets. And from memory, I think it was roughly around 1992 or 93. The US invoked the same sort of tradable permit system for sulfur dioxide. And they had some gains. They expected over 10 years, they reduced by about 25%. And in fact, it turned out to be an enormous success. I think it went down something near on 50% in 4 years. So they arrived at Kyoto quite pumped up. This is the way to solve the carbon one as well. And everybody agreed to it. Of course, this was a bit strange because then America decides not to sign Kyoto. So they kind of leave everybody at the altar. And Europe, the EU, took this very seriously and took its obligation seriously. We in the City of London in 1999 brought out a report, early 1999, on what emissions trading could mean for the City of London. And we created a shadow trading market, which is where people met regularly and said, here's how the contract would look. Here's the emissions. What do we think the price would be? What would I buy if it were available to buy and I had to buy it, et cetera. And then in 2003, the EU said, oh, we've really got to get this going. We promised by April 2005, and they took that on. So in April 2005, there was this big fanfare being launched that said, we will have carbon and we'll try and keep that price by keeping the number of permits in issue dropping every year. We want to keep that price above 25 euros a ton, which is what economists tell us is the price level at which many people will start to reduce their usage. And that's where it was. Well, that went fairly well for about 18 months, but the governments of Europe lied. And they lied about the number of permits that they wanted to emit. So we had twice as many permits around, and suddenly everybody woke up to this, and the price crashed to pennies, believe it or not, from 25 euros. So a lot of people say the market didn't work. I say, no, the market worked perfectly. If your supply grotesquely exceeded the demand, the price crashes. And that's just because the governments were all lying to themselves and to us about what they were really going to permit. And this was largely due to a lot of vested interests, large plants saying, oh, could I please have an out because I'm working in the dairy sector or something. Government's doing that. So it was there. Now, actually, the carbon market has recovered in the sense of the price has gone much better, much more to the reasonable levels of 25 to 30 euros a ton. Interestingly, that's because one of the larger liars in the system, as somebody pointed out to me the other day, has left, which is the UK. Now, that's a nasty statement that they made, but there is a bit of truth in it. And the UK is now in the process of establishing its own ETS, although details can be a little bit vague. I think we have to have this running by April again. So we'll see where that goes. But what's really intriguing and much missed by people is that the Chinese have this year instituted a national emissions trading scheme. And that's huge news. That's fantastic news. So we might be seeing that carbon trading, despite a bumpy ride, is coming together. And it'll be really intriguing to see under the Biden administration, does the US start to pursue ETS more seriously?
Has the UK been affected by Brexit as far as greening is concerned?
Sorry, Tony, I missed that.
Yeah, sorry. What sort of effects has Brexit had on greening as far as the UK is concerned?
Well, some of it's quite troubling. I've mentioned the ETS, and it's a bit sad that the UK, knowing that Brexit's been coming for quite some time, has singularly failed to say what it's going to do on one of the functioning elements of the system. So that's item number one. Item number two, kind of a bit depressing as well, is that there's a lot of talk about, within that ESG quadrant I mentioned, having a new British taxonomy of businesses and green bonds, and what does it mean to be green? And that's a bit disturbing because, one, we do have taxonomies, and in fact, if anything, we have far too many. The economists refer to it as an alphabet soup of taxonomies out there, and here's yet another one which hasn't been done yet. So this is more and more delay. On a positive side, of course, I think some of the stresses of Brexit, what does Brexit bring to Britain, is still a very open question, is at least pushing the government to focus on COP. This COP26 was delayed. It was supposed to be last November in Glasgow, but it will be this November in Glasgow. And the government seems very determined to actually make some positive moves towards that. And in fact, Rishi Sunak announced, I think it was on the 15th of November, that Britain would have a green bond issued this year as well. So swings and roundabouts. Brexit technically hasn't done much at all positive for the formal systems, but it might be doing a lot for the motivation to get something done.
Coming to the City of London, working from home because of COVID has obviously had a major impact. How do you see, for example, commercial property faring in the next 5 years, say?
Yeah, well, that's a completely ongoing discussion everywhere.
Yeah.
Strictly speaking, looking at the core City of London, we have 525,000 workers pre last March coming in and out every day. We're now down to about 4 to 5% of that on a daily basis. So it's had an enormous drop. It's interesting as well that despite all of that, it hasn't really had a big greening effect. Nitrogen oxide and sulfur dioxide emissions have gone down a reasonable bit. The air is cleaner. Energy use has gone down by about 6%. But I think one of the biggest things we've learned is, with regard to green, it's extremely clear that being more aware and changing working habits will only achieve a little bit. Now we move into some really deep structural change in the way that we generate energy in particular. Within
Yeah.
commercial property, the discussion is how are we going to encourage people to actually use the buildings without reconfiguring the entire economy. So I'll point out here that the centers that have been most hit have been those with a high commuter intensity. And London is particularly specialized about commuters. I mean, we have sandwich shops that can only make their money during 9 periods, 5 lunchtime and 4 evenings. It's that intensity. And it's that lack of mixed mode that is hurting cities. And the more the commuter traffic, so Tokyo, New York, London, are hurt much more than cities like, for example, Frankfurt or Munster or something. It's that intensity that kills you. It's the one thing that gave you the advantage is also your biggest weakness. In the commercial property sector, the talk I'm getting is really quite heartening, oddly. Firstly, there's a lot of discussion, which I've raised, on moving towards a more campus or mall type environment. Secondly, developers that I chat to are saying things like, we're trying to figure out how we can get something like 3 or 4 times the impact on the space. Residents in our buildings, tenants, are going to demand now competitively 3 or 4 times more from the building. And this means a lot more interaction amongst people when they interact. And so I suspect we will be looking at trying to turn London into a global coffee house if we can. You know, but I do think that there are definitely permanent changes. One of the
Yeah.
ones I often point to, we had two trends. One was that working from home was a trend. COVID's accelerated it enormously. But another one was Fleegscam, flight shaming. And in 2019 in Scandinavia, air travel dropped by 8%. That would normally be talked about as an unprecedented thing. Of course, COVID dropped air travel by 90%, but
Yeah, sure. Yeah.
why did it drop 8%? Well, the point was that people were taking this climate change behavior seriously. And so I think what we're going to see is potentially people taking fewer trips for longer periods, and when it's business, to a much reduced set of centers. Your boss is going to say, Tony, for 2 years you were able to go and talk to all your clients on this. Why suddenly do you want to go back to these monthly flights? Can't you keep it to 2 or 3 a year? And I think that's probably where it's going to happen. And it's going to happen that way as well, which people forget for two reasons. That competitiveness will do it. If your competitors are able to get away with fewer flights, well then
So should
they.
you.
But in addition, bosses love this. They're starting to change their working methods. How do I manage people rather than just managing by attendance? How do I manage by achievement? And we're seeing, I think, numbers where, particularly in finance and technology, and that is the City of London, 118,000 people in technology and science, and 188,000 in financial services of various forms. Those are the two big areas. Those are the two biggest sectors that say they expect to see more working from home. Now, that's at the boss level when you survey the bosses. What the workers say is, of course, I'd like to go back a couple times a week, and I'd also like a chalet on the company,
Yeah,
and
sure.
the boss are going to say, well, hang on a minute, why am I doing all this if you can actually effectively work from home and have done so for so long? So it's going to be a very interesting play. There will be rubber banding. I don't do it, but I see a huge change in commercial property and its use, but I don't think it's a negative change, and I don't think it's necessarily bad for the larger cities if they really get to grips with it.
Just a bit of a shakeout. Now, what about the politicians? There's one Green politician in Westminster, I believe, Caroline Lucas.
Yes, fair point.
And you have this potential clash, don't you, of capitalism versus idealism. What do you
Yes.
have to say about that?
Well, this is it's almost religious philosophy here at some point. And I'm not a capitalist. I believe in free markets, and I draw that distinction that just because you get capital doesn't mean you deserve a return on it. But in the sense of free markets, there is a huge clash, and I think the interesting thing is, go back to my definition of green finance and pointing out that there's this enormous dependence on government policy. Well, governments have changed their policies an awful lot on green. Spain was famous for one day waking up and removing the solar subsidy, which meant a lot of solar farms that had been done earnestly were now no good. The UK has changed its mind on onshore wind and offshore wind, on subsidies there, on contracts for differences. And this is the difficulty in the green areas. How do I get the governments to be sensible and solid? So the first bit is, can we achieve this just through government fiat and regulation, et cetera? Well, the Soviets are not exactly an example I want to look to. So I would like to see a free market approach. However, I need government policies in this area more than I do in others. So how do we square that? Well, the first is basically governments need to bind into long-term policies they've really thought through. One example that I've been exploring for a number of years is the idea of a policy performance bond. So if we say, for example, in 2050, we're going to have net zero carbon emissions, that's 29 years away. That's 3.4% a year to decrease if it's a straight line, and it probably ought to be. Great. So the government issues a bond, say 50 billion, and says, here's a 50 billion bond, and it will pay 0% interest as long as we're on that target. And if we fail to meet that target, the interest rate is the percentage we missed it. So next year they manage 3.4% down. You say, great, that's zero. The next year they should be at 6.8, and they fail. They're actually running at 1 percentage point above it, so it pays a percentage point. And this bond, why is it important? Well, one, it forces the government to follow its own policy, very much in the way that we have inflation-linked bonds, which are tied to the same idea that if the government fails to meet its inflation policy target, it pays more interest. But the second thing is I can hedge. So as somebody who is in the marketplace, and I say, gosh, my wind farm is very dependent, or in Alderley, my tidal stuff is very dependent on the government hitting its target. Well, great. If I don't fully trust the government, I can purchase that bond in proportion to my mistrust. So in a sense, ideally, nobody would ever want to buy such a bond because they would trust the government to meet its targets. Unfortunately, I can assure you that there are many, many investors out there, particularly the larger pension funds, who would buy quite a bit of this if they could. Because at the moment, their only hedge is to hedge using fossil fuels. So if you don't trust the government's going to meet the target on wind or whatever, then you buy a bit of fossil fuels just to be safe. And this would really help bring the government bit together. And finally, I think on the notion of capitalism, I really do think there's a big lesson from COVID, and it's this 6%. Everybody's sitting at home. We've had nearly 50% of the population working from home. Believe it or not, it's that high. So offices, and it hasn't made that much difference. Okay, and so we need to price and get people to really change. And if you go back to that price of carbon at 25 euros a ton, the average Briton emits 8 tons. So you can see there, that's 200 euros a year, but that could be sort of on average 800 euros a family. And those are the real numbers you need to be talking about. It's not about stopping the use of plastic straws or taking a walk once in a while. These are major changes. And the one I love actually is in 2011 in America, believe it or not, the miles per capita driven by Americans dropped by 4%. Right? Now, that's a huge change as well, especially in America. And why was that? Was that because they were suddenly listening to the Sierra Society or something? No. Price of oil went up 32%. And so prices will really change behaviors. And that's what we need to do. So we need those free markets to work. We need to know that the government policies are going to be stable and implemented and not changed. And government needs to think very carefully about those policies before they do them, rather than, oh, I came up with something this morning that I discovered in the bath. You need to get all of that working.
And what intrigues me about the whole thing, Michael, is that at the moment, electric cars subsidised, £3,000 you get or something like that. Eventually, and of course they pay no road tax. Now, eventually you're going to get to a tipping point on these things, aren't you? Whereby there are more electric cars in circulation than there are with internal combustion engines. So how do you actually solve that one? Because obviously suddenly somebody's going to be impacted with an additional amount of money to pay for the car and an additional amount to run it.
Yeah, well, this is again where an economist like me was probably more interested in these emission taxes, because the difficulty with, for example, a lot of the green cars is they come with a lot of embedded carbon in them. By the time it rolls up, it's got you can get different things off the web and different numbers, but say it's got effectively 50,000 miles of embedded carbon in it, because believe it or not, a green car is actually more carbon intensive to make. The batteries.
Yeah.
Now then, of course, another car comes up and a normal petrol vehicle or diesel vehicle does come up as well with embedded carbon, but then it emits even more as it burns it during the course of its life. And again, this notion of an emission, effectively permit that you've paid for, which is driving everybody to be more efficient on that, works, and you then don't have to make these false interventions. There is an argument, and one that I do respect, that with the electric vehicles, they need charging points. And so you're trying to replicate the infrastructure there, and that in some ways these subsidies are encouraging that. But then there's another angle that people who are proponents of hydrogen point out. Some of these aggressive targets mean that hydrogen, which may be a better solution, has no chance of getting a word in edgewise, because everybody's driving to these electric vehicles at a rate of knots. So I'd rather back off and try to be technology neutral and not set targets that are based on how you do it, but again, targets on, I just want to achieve this emission reduction. That's all I want to do. How it happens is up to the free market to implement. That's a bit of a purist view, I accept, but it's often lost in these discussions
Yeah,
as people
yeah.
seem to
But
think they know how scientists are going to invent something that nobody knows how to invent yet.
well, we await nuclear fusion, don't we?
It's coming
Yes, they've been saying that for a few years as well.
every 30 years. Yeah.
But obviously, with the green situation, the national grid, for example, are going to have to double up on their network, aren't they, to support the additional load that's going to be imposed for electric heating, electric cooking, electric cars, and everything else. So there's a big price to pay, isn't there, on the capital side?
And this is what I mean by, if you take the pure economist view, and people, I've certainly heard a number of politicians on television, if we're just more aware, it's easy to achieve it if everybody cares. That's great from a political point of view, but the economist in me says, if the price is really 25 to 30 euros, then that's what you do. A lot of people say to me, for example, I've offset my air miles because I bought some carbon credits on the voluntary market. And I go, well, great. So how much did that cost you? And of course, it cost them nothing like what it would really cost them.
Yeah, sure. Yeah.
Because I got it cheaply. I go, that's because you're giving money to somebody who claims they're going to plant some trees and they'll never cut them down. That's that I believe. Why didn't you buy a carbon credit, which you can, by the way? Why didn't you buy a carbon credit on the EU ETS and not use it? Now that would be, but that would have cost too much. Well, so we are still in denial about the economics.
Yeah, and I mean, I look at companies like Shell and BP, who made a packet and continue to out of fossil fuels. What happens to them? They're going to have to go very, very quickly into renewables, aren't they?
Well, and they are. The oil companies are clearly making huge changes, and have. I mean, Lord Brown 15 years ago was trying to make BP a little bit more aware, but ultimately, it's not them; it's us.
Sure.
We're the ones burning it. If we didn't burn it, they couldn't sell it, and they would have to change. So they're clearly looking at that. We've had the peak oil debate really since the 70s. I think we at Zien were responsible for a project in 2006 called Burn It All, which is when we realized that you couldn't burn all of the stuff, but people were holding it on their balance sheets at full value. Back in 2006, that led to the unburnable carbon and stranded assets debate. Basically, if you claim you've got an oil reserve and you claim that you can burn, a barrel a year for 100 years, well, how can you do that if you know that you're never going to be able to burn after 30 years? But my accountant says the oil in the ground is priced like that. And so these sorts of adjustments are genuinely happening as people are waking up to the imminence of these deadlines, where beyond which you won't be able to do this in any quantity whatsoever. And you can't say that, although I have an oil field with this much oil in it, I've got to actually look at the timing of it. I can't just say it's a big pile of oil and multiply by the number of barrels the amount of current price of Brent or something.
But we're very dependent, aren't we, on the dividends from people like Shell and BP to actually fund pension schemes. Yeah. So if they disappear, that has a big knock-on effect, doesn't it?
Yeah, well, I much as I would like to see not Shell or BP go out of business per se, I would like to see them transform.
Sure.
Go back to this 3.4%. There's enough time to make the transition in that regard, and certainly enough time for pension funds to find their way through the morass and to find new investments. And hopefully, many of those investments will be in the countervailing technologies of green.
As a result of COVID, we're basically seeing money being printed, aren't we? At the present time.
In quantity.
In quantity. When does that all hit the buffers? I mean, do we see the value of the pound go down? Do we see inflation going up? What's going to happen?
Well, firstly, because it seems to be being printed everywhere, I'm not too sure how much it will or won't affect the value of the pound. And the value of the pound will be teased out in many other ways vis-a-vis Brexit. Changes in working practices. Will working from home actually make the UK more efficient, more exportable? If professional services are more exportable because people are more used to operating on Zoom calls and team calls and whatnot, it could actually be a boom. We'll see about that. But turning specifically, then you immediately hit the inflation issue. And a lot of people, myself included, are very edgy about it. But inflation hawks have been proven wrong now for quite some time. There's a good long look at the Japanese case. And there's a tremendous amount of debate in the city. Charles Goodhart, whom I've long respected, the creator of Goodhart's law, believes that inflation might be very, very imminent due to the big demographic changes that are ahead as populations age and shrink in much of the developed world. So you've got those sorts of views. You've got the modern monetary theorists who believe that you can print as much money as you like and don't fret about it. So the city is a very confused place about that, and it just goes to show that we talk about having macroeconomic theories, but it's still close to augury and astrology.
Very interesting to note that Japan hit 30,000 this week.
Yeah,
that's taken a while, hasn't it?
No, it was indeed.
You know, I can remember, I think it peaked out at 35,000 zillions of years ago.
Yes.
How do you see fund managers going green?
Well, the prevailing, I personally think fund managers are as green as they're going to be. The fund managers will invest where they can make money.
Sure, yeah.
And that's what they want to do. So find a way that they can make money and they will be appropriately green. That's part of the reason that I would like to see these policy performance bonds. We had this decision the other week in Cumbria to open a coal mine. Coal mine's a lot of plant. So do you think the decision would have been granted if they had genuinely believed that 29 years from now, that coal plant can't produce a product that anybody could burn? And it's pretty clear they don't believe that. So I really want to see those policies in place. And fund managers will respond in the same way.
Yeah.
They'll look at BP and say, well, BP at best is a 29-year life, and I've got to plan that appropriately. So that's what I would like fund managers to make decisions that weren't green, that were just good commercial decisions, and leave it alone. However, there's a large group I referred to earlier, the ESG, environmental social governance crowd. They sort of look at this the way that we looked at disinvestment during apartheid. You know, I did my marches, and we all wanted our universities to divest of companies in South Africa that practiced apartheid. I'm not 100% sure that's why apartheid changed. In fact, I don't think so at all. And I believe that movement, whilst well-intentioned and might have a marginal effect, isn't really that important, but it certainly is distracting and annoying for fund managers. There is a third element, which is the kind of the green investor. This has been promoted for many years, and in fact, Jupiter Asset Management, I believe, started this sometime in the 80s, perhaps even the late 70s. And if you want to invest in green products, that's your choice. Just as you can choose to tell your fund manager, I'll only invest in your fund to do with frozen foods or whatever. It's your choice, and I admire that. And I think that's super. It really does put a lot of pressure. But those are fund managers who are looking at a sector in the same way that they would look at another sector,
anything else,
or whatever. And that's good stuff. And they ought to be picking those, and they will create, in fact, in a funny way, they'll create follow through for some of the more generalized fund managers who often track what are the specialist funds really looking at.
Biodiversity. We hear a lot about it. I don't quite understand it, actually.
Well, it's funny because it's a darn hard thing to measure, surprisingly. Biodiversity is the idea that we have a huge amount of variety in any ecosystem, and we want to keep that. So scientifically, it's a good one. There's things like Shannon indices that try and measure it, because it's kind of hard. You talk about a rainforest versus a steppe in Russia. Which one is more biodiverse? Well, it sounds like the rainforest. The rainforest can oddly be equally fragile and shallow, and the steppe can be deeper. It's not an easy area. We've had just in the last 2 weeks something called the Dasgupta Review. Very eminent, distinguished Cambridge professor has led a team with HM Treasury to try and write, and I'd recommend your readers, viewers, have a read of that. It comes in three parts: a really short summary, an abridged version of the report, and then a several hundred-page report. But it's worth skimming, and you begin to see the complexity in it. I personally believe that biodiversity is best achieved by set-asides and preserves and corridors. So this has worked in the U.S. wetlands on the East Coast. If you want to have a new golf course, you have to buy twice as much land and set it aside
Yeah.
to the state or something like that. It's worked in the marine environment when it's been allowed to be practiced, which is you just set these areas aside. And there are some other problematic issues. For example, elephants. I used to be on one of the trustees of the International Fund for Animal Welfare, and what we found was elephants don't like reserves. They're large migratory beasts, quite intelligent ones. They need corridors. They need to be able to walk along it and do. But these are ways that you do it. But you just set it aside. I think trying to put values on it, which was there was a report called TEEB, TEEB, done by some folks who had left Deutsche Bank and did this for the UN, and they put a value of, I forget, 46 trillion on the environment. But I'm kind of like, who are you going to sell it to? What Martian's going to buy the planet? And by the way, if you sell it to the Martian, where are you going to live? And a lot of it's kind of like trying to put a price on body parts. I might be able to price one of your kidneys, Tony.
Yeah.
But how much are you gonna take for me to take your heart? No. And I think biodiversity fails to meet that kind of market test, and that's where I think society needs to be much stricter. One of the proposals, economically speaking, is a land value tax, where you would increase the efficiency of land and keep people from kind of sprawling over large areas. But that's probably for another day.
Michael, we've come to the end of the interview. It's been a great pleasure to talk to you as ever. Thank you so much for sparing us some time.
Well, thank you, Tony. I'm delighted that folks in Alderney are interested in these subjects, and I really admire them, and I wish them the very best during lockdown. And inoculation, I hear, is going very well there. Much better.
We're doing very well on that. Yeah, I'm pleased to say. Thank you so much, Michael.
Thank you, Tony.